Welcome to the Global Shift, where we explore the forces shaping professional services around the world. I am Subarna, and today we're exploring what's really happening in Eastern Europe's development and construction market, beyond the headlines and the investor buzz. To help us navigate that landscape, we are joined by Konstantinos Delidakis, a financial consultant with nearly 2 decades of experience across project advisory, industrial technologies, financial modeling, and risk analysis. He also supports the Court of Appeals of Athens as a legal expert on financial disputes and bankruptcies. Konstantinos, it's great to have you here with us today. For our listeners, how do you usually describe the work you do?
Thank you, Subarna. First of all, thank you so much for having me. It's a pleasure to be here. So, we support businesses and entities in making investment decisions with clarity and measurable outcomes. Our work focuses mostly on tax consulting, project advisory, financial modeling, and risk assessment, particularly in capital-intensive sectors such as development, infrastructure, and funds. And also, as you mentioned before, parallel to the consulting work, we serve as a Court of Appeal of Athens financial experts in disputes and bankruptcy proceedings, where we assess business viability, restructuring alternatives, and real financial position behind claims. So, in simple terms, we ensure that projects are lean, tax optimized, bankable, compliant, and financially sound before capital is committed.
Right, great. Thank you and welcome to the Global Shift. So, let me begin with the big picture. Everywhere we look, Greece, Romania, the Balkans, cranes are rising, infrastructure is being modernized, and industrial projects are accelerating. What is truly driving this new development wave in Eastern Europe right now? And is it the EU recovery funds, the private capital, shifting supply chains, or is it something deeper?
Yeah, so the current growth cycle is driven by three converging forces. First of all, it's the European Union Recovery and Resilience Funds that are accelerating infrastructure, modernization, and energy transition projects. So this creates a pipeline that didn't exist at this scale 10 years before. So, and it seems that it will continue in the upcoming future. Second, it's the private capital that is entering the region in search of yield with construction, logistics, and industrial assets that offer high return potential compared to Western Europe. Because, the truth is that the rest of the Europe had already acquired very decent returns in the previous years. And especially South Europe was falling behind due to the financial problems of Greece, Italy, etc. So it seems that now it is their time to catch up. But it also has to be done with diligence, right? Because as capital can leave the area as easily as it came. They search for opportunities, so you have to provide them with more long-term and solid plans to keep them in the area for many years so they can see the real upside. And also, the supply chains are shifting closer to Europe, driven by geopolitical pressures. Also, decarbonization targets and the manufacturing capacity and data infrastructure are migrating to the Balkans and Central Eastern Europe, generating secondary demand in housing, commercial buildings, and supporting industries. So this geopolitical risk has pushed companies and individuals from the Middle East, Turkey, and even Africa to seek a more friendly and lucrative environment, which Southern Europe can offer. So it's not a speculative boom, it is a structural relocation of capital.
I feel that's very important, like the entire explanation that we right now delved into, because you're describing a region where policy, funding, and private investments are converging for the first time in decades. Now, moving on, many people see a government announcements or like an EU funded project and assume that the financing is the easy part, right? But you've often highlighted that modeling, structuring, and risk allocation decide whether a project lives or dies. So, walk us through it. How does a major Eastern European development actually move from idea to financing to execution?
Okay. So, how deals are really financed, as I understand. Okay, yeah. So, a project moves from idea to execution only when feasibility converts into bankability, right? So the process usually starts with a technical and market feasibility study, followed by comprehensive financial modeling, scenario testing, sensitivity analysis, and cash flow visibility, of course. So if fundamentals are strong, the structure follows: equity commitment, debt instruments, and in many cases, blended finance through European Union funds, state guarantees, or other frameworks. So compliance and documentation here are not administrative. They're determinants of whether a bank or another investor will finance or not. So developers often underestimate the time and discipline required at this stage. European Union funds are out there, but they're not for free. They require enormous detail and your time or your highly paid associates.
Right. So I think that's like the most common mistakes which developers and investors are making, which you very rightly highlighted in the explanation itself. So the region is booming, yes, but it also has complexity. You've served as a legal expert for the Court of Appeals of Athens on bankruptcies and financial disputes. So, from that vantage point, what risks are often underestimated in construction or industrial development projects?
The main thing is that the execution risk is often underestimated more than financial risk. So there are big delays in permitting, contractor insolvency, and incomplete due diligence on land, legal titles that create friction points that later become disputes. So, for example, in Greece, that I'm more expert. It is not uncommon to see changes in construction laws or big delays from departments such as the archaeological, municipalities, etc. So you have to be prepared for these delays, as they not only cost money, but they also test your relationship with all your stakeholders. Also, macroeconomic sensitivity is also critical. Interest rate swings, price volatility in materials, and supply chain disruptions must be embedded in the financial model. So, from my court experience, mostly from my court experience, most distressed projects didn't fail due to the lack of demand. They failed due to governance, documentation gaps, or unrealistic delivery plans. That's a critical part. Provide realistic delivery plans. Everyone wants to show that they can build as fast as they can, cycle the money or whatever. It's not how it goes. Provide realistic delivery plans. And lastly, in my opinion, they have to respect the sales funnels. So demand is growing and is out there right now. But you need to understand that it is another layer in your project, especially the smaller ones, where the one that has the clientele has the real power. So treat them well and also understand their needs, as they will be the cash flow generators of your business, either in-house or outsource. It doesn't really matter.
All right. I think that's perspective. Like the perspective that we just talked about is like invaluable because it connects the financial and the legal realities, right? Where we are talking about the governance and what really acts as the hurdle if we get into the deeper discussion part of it. Now, if a project starts showing early stress, when should leaders shift from negotiation to structured mediation or restructuring?
Yeah. So mostly when cash flow deterioration becomes visible and early warnings indicators are ignored. So the right time is before liquidity breaks, when stakeholders still have leverage and cooperation is possible. Late intervention limits options and increases losses for all parties. So when you see the bump, slow down early. It's a win-win situation for all parties to act fast. Even the more bureaucratic organizations, such as banks or big funds, know already from their experience that the later the stage, the fewer the opportunities there are to change the route. So they want to be part of the reformation. Don't hesitate to change the terms and find a good solution for everyone. Everyone wants that. Even the ones that you think will be opposite of you, they will be with you because they can see that they can lose everything and it's better to lose something small.
Right. So, connecting to that, I think you've dealt with cases involved Article 99 bankruptcy protection, major banking indictments, and restructuring proceedings. So, what's one lesson you wish every investor or project owner knew from observing these cases firsthand?
Uh, Good question. In insolvency and restructuring cases, evidence beats optimism. So, in my opinion, projects with strong documentation and transparent reporting and early dialogue with lenders often survive. So, those operating on assumptions and informal agreements collapse very quickly when pressure rises. For example, one of my biggest Article 99 bankruptcy cases here in Greece was with a major clothing retailer. At his scale, he worked with numerous other companies and subcontractors in Greece and all over Europe. The balance sheets showed the problem from a very early stage, but nothing was done for years. So the proposals for reviving the company were only to buy time for the management, just that, nothing else. So in these cases, there need to be decisive measures. The management must be given to experts on the spot and remove all previous decision makers. There's no point of keeping the old situation and grow the problems. With this delay, not only did this company not manage to survive at the end, but also many other small companies that were very reliant on them also had major financial problems, and some closed at the end of the day. It's like one rotten fruit that can affect all the other hanging fruits close to them. So don't let the problematic ones bypass governance. Take immediate measures.
Right. So documentation, transparency, and timely intervention can save millions, I say, and sometimes can even save the entire project.
Total correct. Total correct.
Looking ahead, what does Eastern Europe's development landscape look like between now and 2030?
Eastern Europe is entering a multi-year development cycle now. So demand for housing, logistic hubs, renewable energy, and digital infrastructure will remain high. So energy transition infrastructure across the region will be decisive. We will see consolidation, like larger players absorbing smaller contractors, capital becoming more selective, and ESG compliance transitioning from nice to have to be a financing prerequisite. So, but opportunity will remain significant for disciplined investors. That's what we need to have in mind. In my opinion, one key factor is what Europe wants to do with the immigration laws, because we see a big shift from the golden visa era, where foreigners were welcomed, to a now much more strict program. But on the other hand, there is a big demand for hands in the European Union and growth, even if it's AI driven, that it's now very common to say everything is AI, needs hands. Experts or not, it doesn't matter. EU needs hands. So that critical decision of EU on how they will handle this issue will also affect the infrastructure and housing projects in the area.
Right. And if you had to identify three qualities that will define successful investors and developers in this new era, what would that be?
First of all, will be the capital discipline, because you need conservative assumptions, strong liquidity, and structured risk allocation. If you're ready for the rainy days, this will affect your whole mentality in the business and will also bring you bigger returns on the good days. Secondly, it will be, I think, the operational due diligence. So understanding the execution realities and not just spreadsheets. Spreadsheets, it's easy. Not easy, it's okay, but it doesn't say the truth always. Find local partners. Do your homework, but cooperate with people that are already on the field and learn from their mistakes. Don't make the mistakes. They have made them already. So learn from them. And third, I would say the regulatory literacy. So EU frameworks, incentives, and sustainability reporting will determine access to funds. But in order to be ready, start when you are still small. Don't wait to make this change when a company is already too big. This will make things much more complex and much more difficult.
Right. I think that was like a very important point where we summarized almost the entire conversation and a very useful tip for anybody looking to get into Eastern Europe anytime soon. Konstantinos, before we end, you've moved between consulting to and financial modeling and legal expertise and also mediation. So I really wanted to know this. What's that one thing that continues to inspire you in this space?
That's a nice question. So I enjoy working at the point where financial logic meets real assets and real impact. So seeing a project move from a model on a screen to a functioning asset that generates economic activity is meaningful. So at the end of the day, our work affects real lives and real people, right? So it is not just numbers, but numbers that are translated to significant developments, housing for people, and technological developments that make people's lives easier. So advisory work gives you the opportunity to transform risk into structure and structure into value. The clarity is what drives me professionally, and I love that.
Right. Thank you. Thank you for that. Like, this was a truly very insightful conversation. There are so many things that are really going on, around Eastern Europe, the headlines, and again, the investor buzz that has been going on so far. But I think this conversation was really insightful with what the on ground reality is, regarding everything that's happening there currently. And the story is, it's, not just about growth, it's about how financial discipline, legal clarity, and strategic planning can truly turn an opportunity into a long term value. I think that is my take from this conversation. Yeah.
Totally correct. Totally correct.
Right. So, to everybody listening, this is The Global Shift, where conversations shape the future of global professional services. Until next time, stay sharp, stay global. Thank you.
Thank you very much for the interesting discussion on the subjects, Subarna. The questions were
Thank
spot on, and I really enjoyed that.
Thank you. Thank you so much for joining in. This was, one conversation I was really looking forward to because this is not something we really discussed at all. This was a very unique topic in the podcast so far, where at least the construction side of things was not really something that we were looking into, and it also aligns with your expertise. So that was something we really wanted to get on a call with and talk about. Right.
Super.
Thank you so much for
Thank
joining in. And yeah,